Hey team, good to be here. Good to see you on Tuesday. Another sucky day, sort of. Weird week. Who's dumping Bitcoin? Who's buying it? Make sure my volume is working. Yeah, looks like hopefully it is. We're also going to talk about the probability of a Christmas rally. Some potential good news as well regarding some altcoins that have some breakthroughs. And yes, altcoins are not dead. We'll look at a bit of Bitcoin dominance perhaps and a whole bunch more. So let's just jump in. And of course, this is always edutainment. I just share data and you make with it as you will. So let's look at the crypto market the last 7 days divided by Bitcoin. You can see obviously Bitcoin divided by Bitcoin is flat. But the last week has not been good. ETH down 3%. Matic down a little bit. I can't see that actual number. But, you know, dark red means down at least 5% plus. Doge, Litecoin, Cardano, Solana, Polkadot, Avalanche, Binance, XRP, everything got hit worse than Bitcoin. So that begs the question, is it Bitcoin season? We'll get to that in a minute. Let's look at the actual percentage change over the last 7 days. Bitcoin down 1.7%, ETH 4.5%, Binance 9.17%, etc. Doge down big, Matic as well down big. And Matic has been one of those names we'll talk about later. It's been holding up very well, this entire market. But again, not a good week compared to, well, it hasn't been a good year. It's been a terrible year. And I can't wait to get to 2023. Anyway, just my personal preference. This has been a crummy year. Let's look at the last stock market the last 7 days. Holy goodness, that is a sea of red. Everything pretty much down. Everything, including Amazon, 6.22%, Tesla, 10.7%, Apple, 8.39%, Microsoft, 4.78%, Google, 5.22%. Again, all the big tech names that we love, we watch, smashed. In fact, even Apple has been kind of a steady rock during this entire bear market, and that's beginning to break now. So this is actually a good sign because people are beginning to see value in other names. We haven't seen it yet in the data, but typically what happens is, you know, the stuff that holds up, that doesn't kind of go anywhere, and other stuff gets really, really cheap, people kind of swap out and move over to it and expect as well some of that tax selling to happen if it hasn't already happened. Let's jump into the story. The good news today, again, we start with the predominance of the most good, bad, or ugly news, and we have quite a bit of good news. But first, let's talk about Christmas rally history, because that is something that everybody's talking about. And normally, for the month of December, the first 2 weeks are weak. And boy, they were weak so far. We are now at the 20th of December, less than 5 days to Christmas Day. And this is from Econometrics. And basically, if you bought a few days before Christmas, pretty much where we are right now, and sold a few days after the beginning of the new year, like sometime in January 2023, you will see green 80% of the time. And the average, the mode of those returns is about 2.2%. Nothing big, nothing to get too excited about, but it depends on exactly how the market moves. And based on the trajectories, this 2.2% is about the same amount you need to risk on the downside if you want to see the trade reach January. Now, since we're not exactly talking about asymmetric bets here, but for those who have trades, and those that trade the so-called Christmas rally trade, you can't expect to make astronomical returns. It's too crowded. Everybody anticipates it. But maybe this year is different. We don't know, but that's an interesting piece of history. Thank you to the team at Econometrics. Right now, typically when it's been such a bad year and there's going to be some window dressing, some tax selling, some repositioning, we'll see. But again, history says 80% chance. We could still have a chance. So don't throw in the towel just yet. Let's look at Bitcoin. And is it Bitcoin season? Well, it's getting very, very close. Down to 29. Bitcoin season is at the score of 25. And you can see here, Bitcoin dominance is now about 42. And overall, altcoins have gotten hit. But remember, we had a really weird bear market, especially back in August, September, where altcoins were super strong, far outperforming Bitcoin. But now I think everybody is so smashed by all of the negative events that have hit the crypto market from this summer, basically from May onwards. Everybody is just tired and jaded. Everybody still believes in crypto, but I think many now are just saying, okay, screw this. I'm just going to buy Bitcoin, stick it in a wallet, and come back in 3 years and see what happens. And a lot of people kind of have that situation. I personally have made my plans. I've made my bets. A lot of stuff is not doing too well. Solana, you guys know, it's less than 5% of my crypto right now because it's shrinking. Then it's ETH, and then it's Bitcoin, and they're my bets right now. I may add another real soon once the price hits. And my equities, as you know, I'm a huge position in Tesla, which has shrunk a lot too, which makes other positions like Google, etc., a little bit better. But everything is beaten down. It's just been a wicked bad year. But I'm optimistic for the future. Let's look at the stock to flow Bitcoin model. What's interesting about this is the variance is at all-time high. Never before in the history of the stock to flow model created by Plan B has there been such a deviation from the expectation. And remember, the color of this rainbow chart, the more blue it gets, the closer we get to the halving. And we're at that kind of 500-day mark away from the Bitcoin halving, maybe a little bit less, 490 days. But that deviation is stunning. Everything is different this year. Everything is different this time around, despite the famous last words of investing. This time it's different. So much stuff is different this season. So let's jump ahead. Let's talk about crypto the last 7 days. A lot of them talk about Binance. Are they going to go under? Is it a house of cards? I don't think it would shock anybody, but there's been massive drainage from the Binance system, but it's kind of stopped selling off. So over the last week, you can see the top 3 crypto names. ETH is down 5%, Bitcoin down 2%, Binance down 10%. And there could be a lot more downside. People are saying, well, if Binance has a big run, has a big hole, it could tank a lot. But then again, they did buy Voyager yesterday, but we know that could be meaningless. Where did they get $1 billion? They don't have any debt. So there's a lot of questions out there. But the Bitcoin net outflows from Binance was about 78,600 Bitcoin over the last 7 days. But it has seen a bit of a strong recovery over the weekend, and recovering more swiftly than Bitcoin and ETH, just a little uptick over the last 2 days. So again, maybe, fingers crossed, the worst is behind us for Binance. If Binance were to hit the wall, that would be really, really bad for crypto. It would be a massive setback. But, you know, nothing can surprise us anymore at this stage. Let's look at some positive news. This is from Will Clemente and Glassnode. Bitcoin held by retail is at an all-time high. Retail investors are defined by those having less than 10 Bitcoin, and they now own 17% of the supply. Now, what's interesting about this chart is when you look at when things historically at this season, like 2014, 2018, here we are at the end of 2022, right at the end of every year in every previous cycle when Bitcoin was cheap, retail jump in. Now, at least they keep accumulating or increasing their percentage of holdings. And that begged the question, why not dig into exactly what's going on here? Is it a retail phenomenon? Are retail investors front-running the Bitcoin whales? I don't know. I don't think so. But let's dig into some data. Let's look at Bitcoin 10 plus holders. They are everything but retail. You can see here, they are back exactly at the level they were at in late 2020. And that is about, let me see those numbers. Number of Bitcoin addresses holding more than 10 coins, approximately 156,000 addresses. That's a big chunk. Remember, each individual can have multiple addresses. In many cases, don't think it's 156,000 people have more than 10 Bitcoin. I don't think that's true at all. Let's look at the different cohorts and find out exactly what's happened over the last 2 years. Again, this data is from Econometrics, and you can see here, again, this chart spreads the last 24 months exactly. You can see that the 1 to 10 Bitcoin holders have grown quite dramatically. So have the less than 1 Bitcoin holders have grown. And that's positive. In fact, the less than 1 Bitcoin holders have grown by 35% and about 20% for the 1 to 10 Bitcoin holders. Let's jump ahead and look at the 10 Bitcoin to 1,000 Bitcoin. This is a little bit different. You can see the 10 to 100 Bitcoin over the last 2 years. It's actually gone down a little bit, gone down about from where they began, about 0.5%. So not a big deal. Let's call that flat. And let's look at the 1,000 to 10,000 Bitcoin holders. You can see it's gone up a little bit. So what's going on here? Who, after all this, looks like everybody is buying, but who is dumping and who has been dumping over the last 2 years? Da-da! These are the culprits here. Those with 1,000 to 10,000 Bitcoin have been letting go over the last 2 years. You can see it's gone from, their change has gone down about 11% over that period of time. And this accumulation has been brought up by this group. So this is kind of a quick summary of exactly how all the holdings look across all the cohorts. You've got the more than 100,000 Bitcoin at the top, holding about 700,000 Bitcoin. That's the Michael Saylors, etc. Then you got the 10K to 100K Bitcoin. They own, let me see, about just over 2 million Bitcoin. I can see that correctly. Then 1,000 to 10,000. This is the core group that owns the most Bitcoin, and they have about 4.5 million. That group has been the group that has been offloading their Bitcoin, and it's been mostly scooped up by the 10 to 100 Bitcoin group. And soon, at this trajectory, that group will be bigger than the 1 to 10K Bitcoins, which traditionally were called whales. So we'll have the new big whales will be the 10 to 100 Bitcoin holders as we go forward. And then you can see less than 1 Bitcoin, just over 1 million Bitcoin. And that is kind of the lay of the land and how it's all distributed, which is kind of fascinating. So hope that helps. Let's go to some more good news around altcoins. And this is according to Sandeep Nailwal, who is the co-founder of Polygon. The number of unique addresses on the Polygon network recently crossed 200 million. You can see the NFT market and dApps on Polygon have played a huge role in accumulating those addresses. Let's look at exactly what's happening with WAU. It's what I call weekly active users. And you can see Matic, most of the activity is on OpenSea NFT action. So it is, again, people say, oh, NFTs, who cares? But it is a great way to onboard people to crypto and start them there and then bolt on all the other added values over time. And hey, everybody, token of the year is Polygon. Decrypt awarded the crypto project of the year to Matic Polygon. And in my opinion, it's just an adoption story. There are now more than 5 million colorful avatars that have been minted across more than 4.3 million unique wallets, and a huge surge of adoption despite the bear market and despite some corners of Reddit being famously anti-crypto. So this is great news for the whole space and adoption, and for this type of growth to happen in this bear market when people are checked out, leaving the space altogether is very, very impressive. This gives us a shot in the arm to believe that this space is very, very real. Can you imagine what the growth would be like once the bull market comes back? It'll be insane. So let's talk about some other good news. This is, as totally promised in an article a couple of weeks ago, he hopes or promises there will be no more Solana outages by year end. And the backup fix is a technology called Firedancer. And this is a special validator that aims to increase the reliability, throughput, and scale of the entire network. So no matter what happens, if some of the validators go down or they upload the wrong code or whatever else, it will not take down the whole chain. Now, according to Firedancer, they can handle over 1 million transactions per second. So they are in a position to onboard billions to the actual chain. And in layman's terms, Firedancer will make Solana faster, more secure, more accessible to billions. Now, Firedancer is able to reliably, just this little standalone tool, accept and filter 100 gigabyte per second of network traffic on their dedicated validator server. And remember, to put this in perspective, I think Solana nodes currently operate around 0.2 gigabytes per second, and the largest recorded spike was over 40 gigabytes per second. So this backup Firedancer will be able to support the entire chain because it has 2.5 times the biggest hit they ever had. And we all know that the Achilles heel for Solana was outages. But what's interesting is the failures were in software modules, which caused consensus issues, and of course, huge congestion, huge usage, and they had no congestion control. They now have fixed the congestion control as well as have a backup for this. So they believe now ETH uptime is possible for the chain. So let's see where Firedancer takes us. Again, this would be another piece of FUD dispelled from the chain. Hope it works. It's kind of like a backup plan for the rest of the validators in the event that they do have that type of usage again. So that's good news. Let's switch now to the bad news for today. First of all, we like to look at correlations here. And this is the last 90 days. You can see technology has been pretty much flat despite the beatdown. And this goes back to September 26th. Despite the beatdown of late that we just showed about technology, you know, Apple, Google, Tesla, Amazon, everything got hit. But some of the other technology names are doing quite well, like the Shopifys and trade desks of the world. But when you look at the Bitcoin correlation, you can see while technology is flat over the last 90 days, Bitcoin is down 5%. There is still that break-in correlation, but it's actually beginning to tick up at the same time and move in parallel again. I would like to see this correlation disappear, but it looks like it's still very much correlated with technology stocks. In addition, let's look at option plays, the bets for the next month out to January 27th, 2023. It's funny, for the first time we're talking about options plays out that far now. And you can see here the max pain price is 17,000, which is pretty much where Bitcoin is right now. So there are a lot of bets being placed, but the delta between the puts and the calls is 0.87, which is not that much, which means there are pretty much as many bears as there are bulls out there. There are some put options placed down to $5,000, $11,000, $14,000, big chunk at $14,000. And then there's some trickle in plays out up to 40,000 for Bitcoin, 23,000 as well, and 20,000 where most of the action is. But again, this doesn't tell us that January will be very active for Bitcoin. So don't feel compelled maybe to rush in right now. According to the option action, let's look at the end of March and see what that looks like, see if it's any different. Here you see the max pain price jumped to 19,000. Remember, before FTX, we were at 21,000, and that took us down to 15.5. But here you can see the put call ratio is 0.32, which is a lot more bullish. It's over 3 times more bullish than bearish. And a lot of the bets go way out. You got 150,000 there, 80,000, 55,000, 40,000. And not as many bets on lower numbers. So this is more positive, far more bullish out to March 2023. Let's look at money flows. Here is the digital asset investment products. They saw outflows of 30 million last week, and they were seen across most asset types, suggesting broad negative sentiment last week that was likely due to ongoing uncertainties surrounding businesses linked to FTX, like DCG, etc. And of course, the continued hawkish rhetoric from the Fed. So nobody is getting a real shot in the arm at that stage. Now let's look at the countries. I only look at the countries from this CoinShares data when I see interesting things happen. And what's really interesting is there were huge outflows, 32 million, pretty much across the board. But Australia and Canada are both buying like crazy. And this could stem from perhaps lack of trust in their central banks and their central banking system and the monetary system. So I thought that was super interesting to point out. But the rest of the countries, normally Germany runs counter to the US and vice versa, but they're all on the same page. Let's break it down by asset and see exactly what's going on there. Bitcoin saw outflows of about 17.5 million. Short Bitcoin saw minor inflows of 1.1 million, so that's a nothing burger. And we have witnessed similar oscillations in sentiment, but these outflows represent the largest since early September, again, after the Fed reported. Now, ETH is seeing its 5th consecutive week of outflows, about 9.1 million, and they're much bigger than the recent ones as well. And other altcoins saw outflows. Most notable were Binance, 1.1 million, XRP, 300,000, Polkadot, 400,000. But there was one standout, and that was Solana, and that was up 700,000. And month-to-date flows up 1.1, year-to-date 121 million. So it's the third biggest asset flow. Actually, second if you exclude multi-asset after Bitcoin. So that is positive all around. We'll see. We'll see exactly what these funds know and why they're investing so much in Solana. Let's look at, speaking of some of the problems out there on the horizon. This is a perspective from Arcane Research of the grayscale arbitrage. Now, grayscale is still looking for an ETF, still get rejected by the SEC, and they published an investor letter yesterday saying, hey, if we can't convert to an ETF, we'd like to try sell 20% of our shares and raise some money that way. That would unlock 20% of the Bitcoin that's in this actual fund and reduce the overall size. I don't know how exactly this tender offering will happen, which certain shareholders will get access to it to convert GBTC into straight Bitcoin in a one-time redemption. But it does require SEC approval and shareholder approval. And I don't know if they're going to get any SEC approval right now. It looks like Michael Sonnenschein has kicked the wrong hornet's nest by filing a lawsuit against the SEC. Now, again, I think the end game I would like to see for this is Grayscale to just sell themselves to a big shop like Fidelity that has much better SEC relationships. And that would hopefully get rid of the discount, which is currently about 48.9%. Discount to net asset value in the ETH fund is 52.5%, which is kind of crazy. And again, remember, they own, I think, about 2.5% of, no, 3.3% of the Bitcoin supply and about 2.5% of the ETH supply. So it's a big, big monster. Let's dig into DCG, who is the mothership for Grayscale. And they have a whole bunch of tokens in their fund. And last week we spoke of the fact that some of these could sell off hard. Will Clemente put it on the radar again in a post? And you can see names that really fell hard over the weekend were Filecoin, fell 30% late Friday, and DCG tokens are selling down hard. I stat ranked these tokens that they hold because they're obviously selling them to raise money to stop the bleed. But I ranked them over change over the last 7 days here, and you can see Filecoin is number 1, down about 30%. Mask Network number 2, Stacks number 3, Yield Guild Games 4, etc. Curve, Decentraland, Flow, Basic Attention Token. It was funny to see a lot of the names that were on there, and again, some mostly not good names. A couple of interesting ones though as well. So we'll see where all this goes. And a quick refresher as to where the problem lies within this whole DCG group. Well, you have, first of all, Genesis, which is the world's largest crypto lender, is collapsing or has a huge hole. Genesis is under DCG, which is Digital Currency Group, and it's a victim of the FTX contagion after publishing Alameda's research balance sheet via CoinDesk, which is also DCG's subsidiary. It's interesting to see how the contagion came full circle when it was the subsidiary, CoinDesk, of DCG that published a paper that took down FTX, which took down Genesis. And again, the problem with this whole business, this whole crypto space, what we've learned this year, everything is connected. Everybody's trading with each other, borrowing off each other, leveraging against each other, swapping crap around, and this is the danger. And hopefully there'll be far more transparency in the future so retail investors can see what's going on behind the curtains so we don't get caught out again. Now, another news, a lot of bad news today actually, sorry about this. This is a CoinGecko report and talks the fact that more than 3,000 cryptocurrencies have listed on CoinGecko in 2021 have failed. Again, It doesn't mean they failed in 2021. Those that were listed in 2021 failed to date. And so far, like for example, the 2022 list is small, 951. But remember, we won't see the full damage of 2022 until 2023 as we go forward. So again, 3,000 gone, another 17, 18,000 to go. So just be careful out there. Remember, the vast majority, 95 to 98% of all crypto is garbage. Okay? It's a money grab. So be careful out there. Let's talk about the ugly news and start with an ugly chart. This is Tesla. And this is, it only occurred to me today, but the head and shoulders pattern is extremely relevant. There was a previous resistance of that $140 level. We broke through that today by a couple of points. And we'll see where all this goes. But this stock is in free fall. When you look at the developments and advancements they've made over the past 2.5 years, it's mind-blowing. Scaling multiple gigafactories, pumping out cars every 15 seconds in some factories, becoming the number 1 and number 2 selling car in 8 countries around the world, including huge countries like the 5th biggest economy of the world, like California, Germany, Norway, etc. Next year is a huge year between the tax credits and Cybertruck and all that type of stuff. And this is where the stock is. And everybody's thinking, well, it looks like Elon's PR disaster of acquiring Twitter and doing all the stuff he's done has upset a lot of people. So this is, again, another classic example of how fundamentals don't matter in some cases in the markets. I always said markets are a blood sport. Investing is a blood sport, and this is craziness. Now, I still have absolute faith in Tesla. I have not sold any. I am just going to sit this one out. I've made my plans, made my bed. It will rebound. Q4 numbers are going to be the biggest ever from all the data I see around production numbers. But there's just so much FUD out there. So we'll see. But apparently, a couple of the bears are beginning to turn as well because the price is so darn compelling. It was like Facebook 6 weeks ago, trading at a PE of 7 with 15% annual growth and a huge amount of cost cutting coming into play for 2023. Speaking of Tesla and Facebook and other names, this is the other ugly news. You can see this is from, I can't remember who it's from. I can't read it. TrueUp.io. This is their list of layoffs. And you can see November 2022 had a huge spike. Tesla, they had their layoffs back in June. A couple of other smaller tech names too. But obviously Twitter, Amazon, Meta, big numbers are getting hit. And I expect Google to be on this list as well. Early 2023 and a lot of other names. And these are the first industries to really do this at scale. But in after the market news today, right before I went live, Nike beat earnings and so did FedEx. And FedEx is very interesting because FedEx is kind of the canary in the mine that detected a massive slowdown in the global economy because they can monitor packages and activities, but they beat earnings. So maybe they were very reduced earnings. Let's talk about real estate inventory. This is another sign that things are not looking good on the market. And this is the impact of jacking rates way beyond where they should be. The local realtor reports, as well as reports from National Inventory Tracker, suggest the inventory of existing homes for sale last month was up substantially over a year earlier. We're talking 45%. And the year-over-year percentage gain was higher than that seen in October. But remember, you have two different data points here. One is the NAR, which is the blue, which they think it's flat. And then you have the actual Realtor.com active. And this is like when you look at rent prices and you look at the government owner's equivalent rent data and you look at the real rent data on things like Zillow. They're not even close. So which one do you go for? You go for the .com because that tells you the real-time truth of what's going down. So if you look at the Realtor.com report for November, I think it showed that the average number of listings, excluding those with pending contracts, was up 46.8% from last November. And that is a 33.5% increase in October alone, month over month. It's going vertical. and that's not good, which means nothing is selling. As I've been saying, the market has ground to a halt, and this is a big, big problem. And just as the NAR inventory numbers understated the decline in effective homes for sale during much of last year, they are now significantly understating the recent increase in inventory as we go forward. So again, watch your source of data. Use things like .coms to get real-time information like Zillow and Realtor.com. And the final piece of ugly news today, not Senator Warren, but her new surveillance bill is pretty scary. On Wednesday, Senator Elizabeth Warren introduced the Digital Asset Anti-Money Laundering Act, which would impose sweeping surveillance and registration requirements on almost all participants in all things blockchains, which includes software developers, miners, and wallet creators. You may remember they tried this earlier in the year, and of course, it just shows you they don't know what they're doing, because miners, wallet creators, to be susceptible to this makes no sense. And this bill would also effectively ban privacy-enhancing technologies in blockchain networks. And the bill is a disaster for digital privacy and civil liberties. I'll leave it at that. I'll have no more comment. But that would not be good. And of course, there's no chance of floating, unless, of course, the people in Congress or in the Senate are just crazy. Anyway, with that, everybody, thank you so much for being here. I hope you learned something new. If you do, hit the like. Appreciate you all. Thank you as well to the mods in the chat. I see you out there, T&D Tesla and K8 and everybody else. Appreciate you. Have a good night.